We got the goals. We revisited what I was doing. Now let's talk about doing a global real estate portfolio review, which is step number 2. As I said earlier, really no one ever looks at their portfolio as a whole because we're not trained that way. And let's be real, when we have like spreadsheets, you have a spreadsheet here for this property, a spreadsheet there for that property. There's no easy way to aggregate all the data. Well, there is now with Property Llama. And just from a high level, like it tells a very fascinating story. Like the numbers, just there's always a story behind the numbers. And this is like part of the science and art of doing a portfolio analysis. Because we want to make sure that are the numbers we're seeing and is your portfolio, is it in alignment with achieving your goal? And so this kind of comes down to that basic understanding of are you in a growth or income phase? So before we jump into the step 3, I'm going to come back to Property Llama and look at step 2. So I've got the global portfolio here. And so, Property Llama, and I'm just going to go down these sections. It comes down here and helps show the goals. So that green line is how far I am towards my goal. So there's my cash flow goal of 240, my NOI 240, and I want 240. I don't care where it comes from, but 240 is my goal. So I am not there yet. And then coming up here, I can see what my whole portfolio looks like. I've got about $2.6 million in total valuation. I've got about 1.7 million in net worth. Now those numbers usually don't do a whole lot, or don't usually impact a lot of decisions. However, a fun little side fact is I've done this with a lot of clients, and I've gotten a really fun privilege of helping people realize that they are millionaires. Like we've gone through, updated their properties, because they bought properties years ago and don't know the current valuations, the equity in there. Then we plug in numbers, and I'll be like, hey, do you realize you're a millionaire? Like you're a real estate millionaire? And they're like, wait, what? And so for a lot of people, like they have a really fun realization. So it's fun to be a part of that. And I hope you get to achieve that goal one day, because once you cross that real estate millionaire threshold, it is a really great feeling and an amazing accomplishment. And like I said, for most people I review their portfolios for, pretty much everyone needs a minimum of 7 figures in equity or greater. We already talked about NOI, we talked about cash flow. Some other numbers here that are really important is your loan to value. So I'm about a 35% loan to value, which is basically saying, hey, how much debt do I have? Over valuation. So I'm about $700,000 or maybe $900,000 in debt divided by $2.6 million gives me a 35% loan to value. So as a high level, the higher your loan to value, the more growth oriented you are. So that'd be the equivalent to like a higher stock allocation. And then the lower loan to value you have, so the lower this number is, the more income focused and the less growth oriented you are. And for my knowledge, that'd be like having a higher bond concentration. If we're gonna I'm trying to give you some reality for stocks and bonds allocations as we're talking about this. Again, I'm not your financial advisor. Always make sure you work with your team and the appropriate licensed professionals to make sure you're getting the best advice for you. Remember, I'm a real estate investor. I'm not a financial advisor. Over here, a couple more numbers to look at. What's my portfolio cash on cash return? It's about 6%, which I don't look at cash on cash that much or rent multiplier. I really focus on what my cap rate is and how much money I'm making a year at my portfolio. So a cap rate, we'll talk more in the individual investments, but helps give you an idea about how well your properties are performing as current rentals. And typically speaking, the higher the number, the better the rental. Now, a current annual breakdown, this just takes all the properties and aggregates the 4 ways we make money in real estate: appreciation, debt pay down, cash flow, depreciation, and adds it up. So in this portfolio, I'm making about $150,000 a year. Now, it doesn't mean it's all cash. It's a combination of appreciation. That's about half of it. Combination of debt pay down. So a good chunk of it is equity. And that goes back to what we talked about. We have to learn how to optimize equity because that's often the biggest return we get from real estate. And really the last, 10 or 12 years between 2010 and 2020 or, 2022, we just had amazing return from real estate where we've had massive appreciation in a lot of the markets out there. And then of course your total cash flow, your total depreciation, and you can click these numbers if you want to play around and see how it works. But from a high level, I get to see how my portfolio is. So let's come back and revisit this. I don't have enough cash flow, nor enough NOI to go out there and achieve my goals of $20,000 a month. So I need to be more growth oriented. But my loan to value is actually pretty much on the low side. So I need more properties, I need more income to achieve my goals. However, my portfolio is much more aligned towards not a very growth oriented portfolio. Because the higher the leverage you have, usually the more growth you have, assuming that over the long run, real estate prices and real estate rents continue to go up.